I do want to move to our call of the day because it's Citi out today with a new note on the semis. And they name analog devices, Shannon, you own it, so I'm going to go to you first. They call it their top pick, okay? Don't be confused, though, because they're negative on the space. They're positive on this one, and the target goes to 192. But they are super defensive, getting more, in fact. We believe semi-stocks can decline another 30% based on roughly 20% downside to estimates and 10% downside to multiples based on previous downturns. So you are, at least according to them, in the right one.
But should you be in them at all is really the question, right? According to this report.
If this is viewed as a more defensive place to be in, I don't know, maybe it's a port in a storm, right? Every sector has some stocks that are going to work in trying times, and maybe this is the one that's it.
Yeah, and I mean, this stock is trading at a 15% discount to historical averages. It is 51% industrial, 16% communications, which will benefit from 5G. I think that if you look at the note and you look at the concerns, is really about PC demand, and this is not new. We've been talking about lower PC demand since everybody started going back to work, and so I don't think there's too much of a concern here for our position in analog, but I think in the overall space, there's a lot of talk about this ordering that has happened perhaps in the last couple of months due to supply chain constraints. And so there could be some cyclicality here that pressures these stocks a little bit lower. You really just have to look over the next 2 to 3 years and try to determine how much of that end demand has been completely met or how much of this supply is going to be sapped as other parts of the supply chain get online. And I think actually that's the positive catalyst for chips. What's
your view here? Qualcomm and NVIDIA are the ones that you have. I mean, and they say that their analysis shows that this downturn, as they call it, looks most like 2011, 2012. We believe the severity of a likely recession will determine how long bad the downturn actually is.
So you look at Qualcomm, 11 times earnings. I mean, and in 5G is really where the strength is, and now they're in autos as well. NVIDIA, we've talked about gaming and data center. I like these coming out of a slowdown because they have really good intellectual property. The question of the overordering, yeah, we know that, but this could be the classic example of if they actually do what the NVIDIA did, what Qualcomm does, which says, hey, things have slowed down, but we have really good solid balance sheets and demand. The question of overordering, I think this could be a 1 or 2 quarter thing, but these are really good cyclical growth stocks that are trading now at a discount, and they could get a lot better.
Now, you say I like these coming out of a slowdown, but what about going into a slowdown? Well, I mean, that's the issue at hand.
You could argue that Qualcomm at 11 times earnings is priced in the slowdown already. I mean, historically, it's been at 15 to 17 times earnings, so it's already 30% less than what it used to be.
Doc, you have NVIDIA stock and calls, AMD calls too?
Yeah, I do, Scott, and I really love the NVIDIA side because they have those 3 big levers to pull. And anytime you have diversification of revenue streams, it's one of the reasons I love Apple and always pound the table about that. I think NVIDIA has that in spades. Now, AMD is just crushing it in data centers. I don't see those going away with cloud and all the rest, as big as cloud is going to be. And we've already mentioned AWS several times on the show. But I think AMD is really just head and shoulders above everybody else in the data center world right now. And that's why those are the only 2 right now in my portfolio.
Joe, you own it, and I think it's the only semi-stock you own, right?
I do. And listen, full disclosure, Joe T has significant exposure to semiconductors. I think the challenge is, as an investor, if you are conducting a diversified portfolio construction, you have to include semiconductors within the allocations because they're so incredibly relevant overall to the economy itself. The problem is, as Shannon spoke about, is that inventories are building, and they're building very aggressively. Days of inventory rose to 53 days from 42 in the prior quarter. So the concern you might have, to your question to Surat, Scott, is if the economy slows down further, well, IT spending is going to slow down as well. That's going to lead to this continued malaise overall for semiconductors. And as I said before, as I began the show, I think the market has the potential here for a near-term rally. But if you want to signal the all clear, well, you better be certain that the semiconductors are participating because they're incredibly critical. Last point on that is I would look at Taiwan Semi. Taiwan Semi geographically and such an incredibly important part in terms of contributing to where the demand is coming for globally, but yet Taiwan Semi is really trading rather awful, as giving no signs of really bottoming and recovering just yet. So I'd watch Taiwan Semi, which is not giving you the confirmation. Semis aren't giving you the confirmation right now. And with the longer term perspective of, okay, is this an all clear? It's just not there yet.